Hello, everyone, and welcome to the Gazebo. Thank you all for taking the time out of your day to join us, and a big thanks to those who were able to submit questions. We had a lot of really good ones, and I did my best to fit the ones that I could into the time that we have. But speaking of time, let me stop wasting it, and please join me in welcoming the man of the hour, Dave Lauer himself. Dave, welcome to the Gazebo, and thank you for giving us your time. So, you know what, let's just jump right into things. And first, we're going to do a section on the terminal. So we got some good questions here because I personally want to know all about it. I've been excited since you've announced it, and I'm sure everyone here wants to get a little more information on it. So the first one we're going to go to is a three-parter. And first, we want to know, what exactly will the terminal be? What is your vision for the terminal? And what benefits do you see it having for retail investors as opposed to what's already out there?
Yeah, so basically, I started spending time on Reddit last year, a little over a year ago, and it was surprising to me. I came from a different world, right? The world of professional investors and large asset managers, and what I saw on Reddit in terms of like the things that people were posting and the data, and everyone was like, oh, Dave says everything's a glitch and all this. And it was it was because the things that I saw weren't what was actually happening in markets. A lot of the data was just really bad, or, really companies under investing in data processing systems. Even the brokers, some of the best brokers had systems that were just not showing the right information. So it started with us thinking, we can fix this problem. This is the thing we really know, Zach and I especially. We've spent so many years with this kind of data, and so we thought, this is a great opportunity for us to help and to get people at the same level as the pros, so that retail and individual investors can make better decisions. That's all it comes down to. So that was the vision. And as we spent more time, honestly, on Reddit and social media, it was just inspirational to see the way that the community had come together and had really, this hive mind that was working to understand and research all this information. And so, what we really said was, what if we took that, like the best of Reddit and the best of Twitter, and brought it onto a platform that was built for the purpose of sharing financial information and research. And so, that's why we said, okay, we're going to bring together professional quality data and tools, and, intuitive, hopefully, ways of dealing with that data and visualizing that data and customizing data visualizations and that kind of thing. Integrate that with a platform that can support a robust community that wants to collaborate on research and share information, and maybe, with people who want to monetize some of their research, right? Like, this is good research that's being done. And you can imagine sort of like a Substack for financial analysts coming together, where we can help to track sort of, what recommendations are people making, help them establish track records, help elevate excellent research. And then the other side of it is something that all of us are at the company are very passionate about, which is education and advocacy. Obviously, I've been advocating for changes in markets for a long time now, and I feel very strongly about that. I wouldn't still be doing it if I didn't feel that way. And so, this seems like a great way to marshal resources and help retail understand these issues, understand markets, understand investing, understand financial literacy, all of these things, and to interweave all of this together, the data, the community, the education, bring it all together, and really hopefully make a pretty compelling platform that people want to spend time on and people want to use to better understand markets.
Yeah, I think it's pretty amazing to have that, bring that hive mind into sort of a place that is backed by someone who has an understanding of this, and I'm excited just to see what we can do in terms of putting sort of the power back into the retail's hands when we actually organize all this and create something that really kind of helps that. So I'm excited for that.
Yeah, and I've just been told to say platypus, so there you go. And I see you work from home parents sharing my pain.
Yes, I've been work from home for the past year, and that's kind of why this all happened. So I'm
I'm
able to
very,
sort of do this on the side.
I'm also very meticulous about my kids online, and like there are no pictures of them online,
Yep.
and I don't want the kids to sort of show up on something and get
Nice.
screenshotted and put online. It's something we've been working hard on.
It's a good background. Okay, let's move right on. So next question is kind of in. So you kind of covered it, but we do want to dig a little bit more into sort of the data and what data are you going to be making available, and is it kind of, are you looking to sort of bring us to information parity with the type of data that these hedge funds and market makers actually have? Is that a possibility to get there?
So at a certain level, yes. The data that we're going to be providing is the same data you would find if you were a hedge fund or a high-end asset manager or quant fund, anything like that. We went to the same data vendors, and in fact, the platform that we're working with called Cloud Quant, they're a partner of ours. They're building our data fabric, but they also operate basically a data marketplace, and many of the biggest hedge funds are their clients. And so, absolutely, this is a way of achieving parity. Now, one thing is how useful is that parity is a question, right? So there are certainly people out there who want access to this raw data. They want to do really compelling research. We want to empower them to do that and enable it. And so, for many people, this is going to be a game changer in terms of the kind of research that they can do. Now, that doesn't mean for most people, they need access to that kind of raw data. What I think most people want are really more like insights on, what companies should we invest in, or, understanding better how market structure will play a role in price action on GameStop or something like that, right? So they want to be able to continuously read new research that uses the best data. And so I think that's what we're trying to figure out, is how can we structure a platform in which the excellent people want to come and produce really high, compelling content for the communities that form around different things, different stocks, different themes, that kind of thing. And so that's, not really a technology problem per se, although, you have to build some tech to do that. But I think it's more of sort of how do you structure the incentives on the platform and who do you partner with, which is, really important to us. And so that's what we're spending a lot of time on. Okay,
that's good to hear. So next we have, I'm sure a lot of people are probably interested in this, and I know you have this listed on your site, but oh no, sorry, that was the next question. But this one, we do want to know also, you see all these glitches and everything that come up, and that is kind of the fault of the data providers. Are you going to have a solution, or is it even possible to have a solution to sort of prevent these data glitch issues, or is that kind of on the providers and your hands are sort of tied?
Yeah, it's a hard problem. I think there are different categories of glitches. There's one category which I think is very common in platforms that are being underinvested in, and that is that they're just not doing it right. So we can fix that, especially when it comes to like the processing of raw market data. It's very hard. It's very nuanced. You have to have done it for a long time, and you have to continuously invest money in it. And so we're confident that we can fix those problems. And honestly, from what I've seen, I'd say that's like 75% of the issues out there. In terms of when bad data comes through, that's a harder problem. So what we're doing is for most of our data sources, we've signed up for redundant providers. So for every data point that we get, we've got a second reference one that we can look at as well. And so we'll have automated systems that we've built that are trying to, make sure that both sources match each other. And if they don't, then if it's the cheaper source, which is really all we're using the cheaper source of data for is that redundancy checking, then we're probably fine and can toss it away. But if it's the primary source, then that's probably something someone needs to take a look at. So, that will catch a good number of problems, probably, another 15 to 20% of the problems that other systems have. So, I think if you add that together, that gets us to sort of 95% of the time we will catch something before it makes its way to the end user. But yeah, there's no way with this volume of data that there won't ever, not be some things that get through that we've just missed, and we'll continuously, work on it and add to our checks, that kind of thing.
Yeah, so building in the redundancy should help that. I wonder if there's any way to like sort of utilize AI or something that might kind of catch those glitches, that it might kind of understand that, hey, this doesn't make sense, and sort of also report that as a sort of glitch or improper data. I don't know if that's possible. Just thought that it came into my head while you were talking.
Yeah, I mean, that's sort of, what we're thinking of in terms of the way we're doing that automated checking against redundant sources. It's very much an automated system. I don't know if, AI is going to be the thing that powers it or not. It's an area Zach and I have a lot of experience in. So, we'll always be thinking about, are there better, more automated ways to do this at scale? Because that's the challenging thing. You can do this for, a small amount of data, but doing it at scale while servicing, what we hope will be hundreds of thousands of users every day. That's a tougher problem to solve.
Of course. Okay, another one a lot of people probably have asked about and want to know about is kind of on the personal information side of things. I know you've mentioned this and it's on your site, but it was asked sort of what information will be available to outside entities if anyone wants to sign up, or will there be?
Yeah, I very much appreciate that people care about their privacy.
Yes.
I think far too few people care about privacy, as was, maybe evident when I said with my daughter. I take privacy very seriously.
It's good.
And I care very much about it. I've been, just for background, I've been a supporter of the EFF, the Electronic Frontier Foundation, for like, honestly, 2 decades now. It's something that I feel really strongly about. So when we started, we did a bunch of things to make sure that we were protecting people's data and privacy properly. So for example, when we started the company, we said we're going to abide by GDPR, the European Data Protection Regulation, even though we don't have to, simply because that's the best legal framework in the world right now. And we even spent time and money and resources, which are, precious to a startup, in order to make sure that we had the right policies in place, and that we were reviewing the privacy policies of every single third party that we used. And in fact, as we found that some were not up to our standards, we dropped them. So, different email form collections, or the mass mailers, or some of the things we did with on the We the Investors website, we just found that those privacy policies were not sufficient for, that they could collect and sell data, and we were not okay with that. So we dropped them and built it ourselves. We built like 3 startups in just rolling out the We the Investors website, because we didn't like what those companies were doing with data. So the short answer is all personal information will be completely protected. We have a bunch of privacy settings that are not in the system today because it's a closed alpha, but once the system gets opened up, there will be, every setting you need to control who can see what, from your profile information to your posts, that kind of thing. Communities can set all sorts of different settings in terms of whether they want those communities to be publicly viewable or not, as well as whether you want to allow anyone to join your community, or do you only want verified owners of GameStop, for example, to join your community, and people can hook into their broker or computer share, validate that they own those shares, and that'll give them a token that lets them get into communities that want to be closed. So we're making it so that there are a lot of fine-grained settings for controlling that kind of information, and there won't be any trading through our platform. This is a research and analytics platform. We might be partnered with some brokers. We've been finding some brokers that, don't accept payment for order flow and are very much aligned with our ethos. And, there might be some interesting partnerships there, but I don't really foresee us being a trading platform. And so if trades were loaded into our platform because you hook into your broker and you want it to automatically populate with your portfolio, that data would be protected. No, it would never be sold. That's 100%, from day one, what we stand for. And I see someone talking about, how some of these features would help root out all the shills and bots. And that is exactly, what we're trying to do.
Yeah.
We're trying to create a community in which there are frictions. It's not as easy as Reddit to join and engage. And we think that by introducing those kinds of frictions, we can severely reduce and maybe even eliminate the influence of bad actors and automated actors and that kind of thing.
Okay, that's pretty interesting. So I guess in terms of that, is there like going to be a set number of brokers or a list of brokers that will be able to connect to that, or is that something that kind of any broker can do? Like me as a Canadian, I'm with Scotia. Is that going to be something that can connect, or is it only like a starting list that you'd have to be with in order to connect with you?
So we haven't done this work yet, so I can't. My general thought was that we would use a data aggregator, someone like Plaid or something like that, in order to get the brokerage information. I'm not putting that out there as what we're doing, because like I said, we haven't done the privacy review on those different providers, but there are a few of them that we could take a look at. So we would hope with sort of one integration, we'll be able to hook into a lot of brokers versus having to build those connections manually, which would take, a pretty good amount of time and effort.
Definitely. Well, it's really good that you're looking into that, because that's a good point. It is a good kind of idea to stop those bots and everything from getting onto the platform and having your little closed communities. So, I mean, you kind of answered. You did. The last question I had about the terminal was, is it going to be a trading platform? So no, and no intentions to probably do that. Do you ever have intentions to actually introduce maybe paper trading on it? And if you did, just for learning and kind of using it on your site, and then if you did do that, is it possible to do like real time? You know how paper trading is always 15 minutes behind. Is that something that you would ever look into, or is that you don't think that's worth it? Or
so I think one of the reasons paper trading is generally 15 minutes behind is because that's the cheap data, and we're going to have the higher end real time data. And so everything on the platform can be made real time. And yeah, I think that's probably an interesting idea. I think once the platform is sort of set and launched, which we're hoping will be this fall. So, the platform today is in the hands of our pre-seed investors. So we raised our pre-seed round through WeFunder. We did a crowd equity round. So we raised $1.25 million from about 1,350 people. And every one of them is a user of our alpha platform, and it's just been an amazing experience to have and it was inspired by the entire GameStop movement, right? GameStop investors are the biggest fans of the company and the best customers and the loudest evangelists, and that's what we wanted. And so that's why we did it that way, and we wanted people to have a stake in it, right? Not just a Kickstarter, right? We wanted to give people equity in the company. And so we're about to do another crowd equity round.
Yes.
And that'll bring in another wave of investors and alpha users. Soon after that, we will open it up to our beta wait list, which is at about 10,000 people. And then following that, we'll launch it to the public sometime in the early fall. And then at that point, we will see what people want, and we will build new features based on what users want. And, we'll be very open and amenable to all those kinds of requests.
Awesome. So I'm assuming that next round, anyone can get in on investing. Is there a minimum limit or anything, or anyone?
Yeah, $100.
Beauty.
Anyone
I'll be there. Okay. So that's kind of all the time we had for the terminal talk. Unless there's anything else you wanted to mention, I'll give you time at the end to mention anything else we missed. But now the big one everyone kind of wants to know about is, let's go into market talk and market reform.
Sure.
So the meat and potatoes. So first, we want to know, so we hear about infinite liquidity and settlement windows, which undermine supply and demand. And of course, FTDs seem to be a useful tool to make those loopholes larger. So I guess, why aren't FTDs a bigger focus, or do you plan on that being a bigger focus?
I see this question a lot, actually. And maybe it's part of it is like, I'm not doing a great job of explaining this. So I want to, you know, get that clear. When someone like Doug Sifu says that they create infinite liquidity, which I think, as everyone understands, is just absurd. The reason that they do that is payment for order flow and internalization, right? Like, that's what underlies this infinite liquidity. And I think that's a really important point to understand. As long as Virtu and Citadel maintain, you know, this duopoly in the off exchange space, you know, the way that they provide infinite liquidity is because of that. Now, it's complicated, right? Markets are complicated, and we tend to confuse what's called the front office with the back office. So the front office is trading, and that's where, you know, the internalization is happening. That's where it's considered. That's the front office, and that's where, you know, they're providing infinite liquidity, right? Mm-hmm. Then, you know, the settlement and clearing is after that. That's in the back office, okay? And so that's where, you know, there are a whole host of problems in the back office as well. There are a whole host of problems in settlement and clearing. And that's why when we first launched We the Investors, you know, one of the main sort of planks of our platform was settlement and clearing. And what I tried to do early on with it was to get the experts that we were working with in the industry to also sort of agree and concur on what the problems are and what some of the solutions might be. And we struggled with that on the back office, because part of it is a lot of the people I know are really from the front office. But it's something that we are spending time on. And my plan, because I've heard this and I've heard what people want, and We the Investors is not supposed to be something that, you know, I drive. It's supposed to be a grassroots advocacy campaign, right? It's retail representing retail, and so yeah, this is something that my hope is that the next you know, raft of things we're going to advocate for will focus on FTDs and you know, settlement and clearing. So yes, that is absolutely the plan. Now, you know, right now we are very focused on payment for order flow and excessive off-exchange trading, and I would say that is the very front part of the infinite liquidity problem, and so we are attacking that problem. And you know, I would really, I know everyone wants to solve all the problems at once, and I would love to do that too. I've been working on this a long time, and I can tell you that there has never been a better opportunity to get these changes through in markets than right now. Literally today, we have an SEC that wants to do it. We have an industry that is rallying around this, and we have a horde of individual investors coming into the fight. And I've talked to a lot of people, you know, ex-SEC commissioners that I'm very friendly with, people at the SEC, people in Congress. And We the Investors can actually be a difference maker here, and the, you know, the army of apes and individual investors can actually be the difference. But I'd be cautious about spreading that too thin. I think it's better to focus on, you know, this really fundamental big change, and then we will focus on the next really fundamental big change. And, you know, so I at least in my opinion, and having a decent amount of experience doing this, I think that's the best way to get what we want ultimately. And, you know, there's never a quick answer when you're talking about regulation or Congress. And in fact, you know, we're putting in the groundwork to make sure that whatever happens in November, you know, we get people to understand that we think these are bipartisan issues, that this is not a left versus right thing. And, you know, to hopefully lay the groundwork so regardless of what happens, you know, we're still in the conversation and they still understand that the people care. And that's the most important thing.
Yeah, and I agree with that. I think it is smart, obviously, to tackle things step by step, not, like you said, not spread yourself too thin. And so it sounds like payment for order flow is kind of the first domino in removing that incentive of providing that infinite liquidity. So that does make sense. Do that, then move on to the next one. So that kind of, obviously, that you answered the second question I had, which was for fixing it. So let's go to the third. Now this is a fun one. So beside payment for order flow, can you name 3, or I'm sure you can name more, major issues with our markets that must be reformed in order to not only bring more fairness and transparency, but also have the impact of removing systemic risk?
Oh yeah.
Go on. You have the
I think,
floor.
I think you get systemic risk in a couple of ways. I think one of the biggest ways you get systemic risk is concentration. When you have 2 companies, for example, that are responsible for like 50% of all trading on and off exchange, that's a huge problem. That is systemic risk. And I would also say you get systemic risk when you have things happening in markets that are less, I know this might be a touchy thing to say, so just hear me on it, but when you have things that are less regulated, and it is not to say that like regulation is always the answer and it fixes everything, but it is to say that the regulated space is one in which there are rules, whether you think they're being followed or not and enforced or not, that's an entirely different issue. And
Certainly.
you can probably compare with what's happening in crypto, for example, and say, there's an example where you don't really have rules, and things are kind of falling apart at the moment, and it'll recover. And that's, but it's an practically unregulated space. And so, when things slip through the cracks of regulation, I think that also leads to systemic risk. And so when those 2 things come together, right? So like, for example, what Citadel and Virtu do with their single dealer platforms, in which, those are the facilities that they execute a ton of retail trades, and they are not regulated as ATSs or dark pools or alternative trading systems. They're not regulated as exchanges when they're doing more volume than a lot of exchanges are doing. That both concentrates risk, and it means that those facilities are not being overseen by enforcement authorities the way they need to be. And so that's really like, when I'm thinking about how you reduce systemic risk, it means what you really need to do is you need to increase diversity and increase competition. I'm a capitalist when it comes down to it, and I think capitalism has really awful results and problems when it veers towards cronyism and concentration. And that's what we see in the US, right? It's just a complete crony system, corrupt system, and a concentrated system. But it works really well when it's open and competitive. And so, I think the things that I'm pushing for right now, for example, would, I really believe, reduce systemic risk, right? So if you pass something called a trade at rule, which would take all of this retail flow and put it onto exchanges, you would have so many firms competing over those orders that you would hopefully eliminate this duopoly of Citadel and Virtu and the systemic risk that they pose. And so then if you have hundreds of firms, thousands of firms maybe competing, the failure of any handful of those firms will not impact the system. Whereas when your risk is entirely concentrated in one firm last year, right? Like one market maker who was still in the market when everything was falling to shit, that's like a terrible outcome. Like, our markets should not depend on a single firm. And that is an argument, again, that really resonates in a bipartisan way on both sides. And so, I think that that's one example. And so, yes, that is sort of in the payment for order flow mold. But I would also say, like getting these other systems, these single dealer platforms, out of the sort of edge case that they occupy, where they're not an exchange and not an alternative trading system, I think that would also help. And then I do think that reducing settlement times, preferably to something like T plus end of day, at least. I know people may not like this. I'm not a big fan of real-time settlement, because there are issues that I think a lot of people don't think about, like around margin and around different currency trades. Things take time to settle. It takes time to move money. It takes time to make currency transactions for foreigners who are transacting in US securities, for example. It can help to have some settlement time. But a T plus end of day should be a very reasonable thing to go to, and even a decentralized settlement and clearing operation. So there's a company called Paxos, and they've been, great to help me understand the settlement and clearing space much better, and to understand the problems and the potential for reforming that space. And so they use smart contracts in a decentralized manner to reduce the need for a central depository. And so I think that's a really good idea. It's the kind of thing that FTX is pushing with their, sort of decentralized futures clearing and settlement initiative. So, I think those are the kinds of things that if we want to reduce both the risk of a centralized failure point and increase capital efficiency, where these firms don't need to post all of this collateral because it's done in a decentralized way. I think that will improve markets, again, provided that we have the appropriate checks and balances in place with these smart contracts to make sure that that settlement clearing process is actually happening, that those shares are being transferred and transacted, and we're not, again, just printing infinite liquidity.
Yes, yeah, exactly. Okay, I'm gonna skip to this one question because not that one. This one. Nope, this one. I don't know where it is, but let me find it 1 second here. Here it is. Okay, so this kind of goes on to the decentralized system you mentioned, and so we wanted to get your thoughts on either the markets eventually becoming a completely new system based on blockchain, which I know that's a huge deal, or do you actually kind of sort of in the closer future see blockchain playing a role in restoring this transparency in the markets in terms of using it like kind of partially? Do you see them kind of merging together as one? And kind of what are your thoughts on that? And then I guess to add to that in terms of the terminal, do you have any plans for if this does come to sort of adopt that into the terminal as well?
So first of all, on the second one, that's easy. Yes, we are not staked in this current system. That's an accusation that's been thrown about. I don't. As a company, it doesn't make a difference to us. We're going to have crypto data. We're going to have other asset classes, other regions, and if things move to crypto and blockchain completely, we will be hopefully the preeminent source for data on that system as well. So we'll be ready for it if it happens. And I think that's also, just to go off on a mini tangent, something that's really important and unique about us, which is that we are not advocating for changes to markets that benefit us as a company. And we're probably one of the only people in this entire conversation that can say that. We're actually independent. Even some academic researchers who will claim independence, they're funded by the industry. They get their data from the industry. It's tough to be independent in this. So I think we're advocating for what we think is right and what we've been pushing for. And what I've been pushing for, regardless of where I've worked. And so I really think it's important to have that kind of integrity and independence. And I can see that it's appreciated when we meet with people. And to the question of should we overhaul the system and
throw it out?
I hear it a lot. And I personally, I don't think so. And I would say no. I think that the current, markets are the engine of the economy. And this is real. It's serious what we're doing and what we're playing with here and trying to fix. And it has real world economic, impacts to everyday people and in their lives. And, if the system were to come crashing down, the human pain and suffering would be horrendous. So I will never push for that. I think that's bad. And I know, people might say, well, there's nothing we can do. It's the elite that have put us in this position. And even if that's true, I will not push for something that I think would cause widespread human suffering to either get back at the elite or teach them a lesson or, put them in their, whatever it is. So, I think from a practicality perspective, you're talking trillions of dollars of transactions that happen on the current system. The idea that there's a switch going to flip that's going to move to blockchain or something like that, I find it impractical. I don't find the ideas of how we quickly move over to a new system to be compelling from a sort of operational perspective. So I think that there are interesting aspects to blockchain technology. I'm a geek, right? Like I'm a programmer. I bought Bitcoin in 2010.
Nice.
So, you know, I also sold it, so I'm not filthy.
Of course.
Bitcoin is, I like to say it was my best and worst trade of all time. So I bought it at $2 and I sold it at $1,000.
Yeah.
And I thought I was a genius, and you know,
I learned about it at $2 and was too lazy to scan my driver's license to go open an account.
Yeah,
but I do the same thing.
I had to go send money to the dude at MT Gox.
Yeah. That's funny.
Pulled it off of MT Gox, but you know.
Well, could you see it slowly kind of transforming into one, like in a manageable way where we introduce it, and 50 years from now it sort of all is sort of on blockchain, where you're not just tearing it down and building something new, but sort of kind of transferring and introducing the benefits of blockchain and crypto tech.
I think people have wanted to do that, and I hope that it might happen. So you know, someone's talking here about Japan, and
yes, yeah.
I know, I don't know actually much about what Japan is doing, but I do know what Australia tried to do for a long time. And it was just like tech failure after tech failure as they tried to move to a completely blockchain based system. And, you know, that was over the last few years. So, you know, it was, you know, I would say maybe the skills weren't there yet. The tech wasn't mature enough. And yes, cautiously ambivalent, I can see this. But, you know, I think if Japan is doing that now, that's encouraging. But Japan is a relatively monolithic market. It's mostly one exchange. It's not a fragmented system like especially US, Canada, to a lesser extent, Europe. And so it is a far simpler system. I think actually Japan is a great market to model after, because if you look at, we have this slide in our, in our We the Investors presentation that we gave on payment for order flow to the SEC. We have this slide that looks at execution costs relative to company size and order size around the world. And it shows that the US is not the most liquid market in the world. And it actually shows Japan is the most liquid market. And part of that, I know someone earlier in the chat was like, why aren't we going to 24/7 markets? But Japan has the least trading hours of any other market in the world. All right. They're only open 5 hours a day. They're open like 2.5 hours, then they take lunch for a while, then they're open 2.5 hours, and then
I like it.
Right? It's great.
Let us have a break.
Yeah. If you're a trader, that's the best market to work in. I'm surprised the Spanish market doesn't work like that.
Seriously, yeah, it's European
like
markets.
Hour of trading, siesta and lunch.
2 hours for lunch.
Done, right? Like,
that'd be nice. Let's move to that. 2-hour trading days.
So, you know, I think we want to have fewer trading venues, less trading hours, you concentrate liquidity, and that leads to better outcomes for everyone. So, you know, I think, but what, you know, just to get back to the original question, what I said before in terms of like Paxos and the example from Paxos, you know, that is a blockchain based system. It's not really all about a distributed ledger. It's more about the smart contracts that you can use with blockchain, but it is, you know, in pilot today with large brokers who are clearing and settling trades peer-to-peer without a centralized counterparty, and it's working. So yeah, I think as firms in the industry see the capital efficiency and cost reduction that they could realize from something like that, I think we could have a pretty substantial move over just to clearing and settlement, but it takes a long time. I mean, honestly, like a lot of these systems, you gotta, they're one of the main systems for doing like securities lending transactions. It's called LoanNet, and it's still based on COBOL, and it's like 30 years old since anything changed, and no one wants to touch it because no one knows how it works, but it works. And so like that, you know, we like to think that markets are so like technologically advanced, but underneath it all is like these old legacy systems that no one knows how they work anymore and doesn't want to touch them. And it's a huge risk to do that. And these are very risk averse firms.
Definitely. I did have just a question come through about Ethereum. Now, do you see Ethereum to be at risk from regulations by the SEC? And I mean, is it a risk, or do you find that as something that possibly could be good? And then also to add to that, they just want to know how you feel about ETF markets.
Well, so, Gary Gensler came out, I don't know, a day or two ago, and he said that the only cryptocurrency he believes is a commodity is Bitcoin, and that everything else is a security.
Okay.
So, if you're going to take him at his word, then there's a lot at risk in crypto because of that. So look, I don't know, and I don't know what the SEC is really going to do. I think they're going to try to regulate crypto exchanges like they do in equities. I think they're going to try and come up with some kind of investor protection disclosure regime, which I think is a great idea. And I think you see, crypto sort of self-regulation proponents already pushing for standards around that. I think those would really improve the market. And I think that they might come after certain, tech like they have with XRP, because they want to show people that they're serious about enforcing securities laws. But Ethereum specifically, I'm not sure, and I wouldn't think so at this point, but because I would think they would have already done something, but I don't know.
Yeah. Okay. Well, I mean, speaking of Gary too, I did kind of want to ask this, and I mean, I just want to get your honest take after your meeting with Gary. Do you feel he truly sides with investors? I mean, and does Wall Street have a hold on him? And I just want to honestly know your honest opinion on him and like who he is as a person and what you see him doing for reform, and do you think we'll see change because of him? I guess honestly, just who is he as a person? We haven't met him. You've met him. I want to kind of understand what you think.
I was really impressed. I met him. We had a great meeting. He was engaged. He was excited to meet with me. He was, really interested in what we had to say. He was, when I gave him that presentation, anyone can go look at it. And the last slide I thought was really important, in that, I told him, you have a grassroots organization here of tens of thousands of people. At the time we had the sign-on letter was signed by almost 72,000 people. And then the organization itself, we had over 80 some thousand supporters that have signed up in just 3 months. And, my point that I ended the meeting with to him was that we're here to have your back. You want to make real change, you're going to have a flood of support. You will get those comment letters, you will get pushback against the industry. We're here to make change happen. And I think it really resonated. And people say, why hasn't he done anything? Look, the current set of regulations in markets, Reg NMS, that really governs most of markets, have been in place. They were passed in 2005. So it's been, and then they were enacted in 2007, but it's been 17 years since we've really materially rewritten securities regulation. And what he has laid out in terms of what he wants to do is the most ambitious rewriting of securities regulation since then. And it's getting a lot of pushback from very powerful and wealthy firms. And so, he has to contend with that. And he has to make sure that when he goes to make these changes, that they are so buttoned up and airtight that when he gets sued, he can win that case. So that's just the nature of regulations. These things move slow. So, you want my honest opinion? I think he's going to make the changes that he's trying to make the changes that we want. He doesn't know if they can survive judicial scrutiny. And so we might get a different set of regulation that have the desired effects, but not in the way we want it to. Like he might get rid of payment for order flow by making it uneconomical instead of banning it, for example.
Yes. Yeah.
And I don't want to see that. I want it to just be clean and banned. But I'm not a lawyer. I won't pretend to have been the chair of the SEC. He's got political considerations. The Congress is about to change probably in November. It opens him up for more oversight and investigations. It's a tough position to be in. But my honest opinion is that Wall Street does not have a hold on him, that he cares about people, he cares about investors, both institutional and retail. And he's trying to solve some very complicated problems and hearing some very conflicting opinions from very smart people who are all talking their books. And hopefully us coming in without a book to talk is something that really helped in that.
Okay, that's it. Yeah. So it kind of sounds like he's kind of in a rock and hard place where Wall Street's almost pushing against him in terms of trying to ban these rules. So I guess for me, I want to understand how do these rules get pushed through? Who approves them? What's that process look like?
Yeah, so it's a pretty complicated one, and it's all set out in the APA, the Administrative Procedures Act. So it's prescribed by Congress. It's very specific what the process is. But what he has signaled is that he has asked the staff to study and write new rules. So what will happen is the staff will do that, staff of the SEC, and then they will propose that rule to the 5 commissioners, and the 5 commissioners will vote on those rules. And if it passes, then the rule becomes an official proposal. That rule gets proposed out, published for all the public to see, and that starts a comment period, anywhere from 30, 60, or 90 days, depending on what they decide they want to do. And one of the criticisms of him has been that he's only been doing 30-day comment periods. I'm sure that this set of rules on market structure will be longer comment periods, probably 60 days, because it's complicated stuff and a lot of firms are going to want to comment. And longer comment periods are even better for individual investors and people that aren't doing this on a paid to do this.
Yeah. We got to wrap our brain around it.
Yeah, it gives us a chance to spend the time that we need. And so then people will comment, and what we're going to do with the investors is, as soon as there's a rule proposal, we're going to read it, we're going to summarize it, we're going to provide the information that we think is worthwhile for people to judge the rule on its merits and to form an opinion. We're going to suggest language for comment letters. We're going to provide a comment letter. If you just want to file a form letter, that's fine too. But the most impactful thing you can do is file an individual comment letter that is reasonable, that is, well spoken, well researched, that makes the points that you want to make, and that that's how you make a big difference, is getting involved personally in the comment process. It's easy, if they get 10,000 form letters, that's good. It shows people care, but it's also 10,000 of one letter. If they get 100 individual letters, that's more impactful than 10,000 of one letter.
No copy pasting, actually write your own letter.
Right. And so then, the SEC has to take every comment letter that they receive into consideration. They have to read every single one, and then they come out with a final proposal, which then the commission votes on. And if it's approved, it becomes, an official regulation, and it will usually have an implementation time. It will say, within a year, all firms have to do this or something like that. And then that will give firms the chance to challenge it in court if they want to, and probably will. But what we've seen in previous court cases, sometimes they stop the rule from taking effect, like in the market data case that just finished up. And sometimes they don't, like in the IEXD limit order type case. This will probably be the latter, this will probably be the former, where since it's not going to be what's called an immediately effective rule, it's a rule that will have to take effect later. So it will probably be slowed down by the courts and by Citadel and Virtu and Robinhood and Schwab and all those, retail brokers. And they're going to delay every day that they can continue to collect payment for order flow, and that the internalizers can continue to trade against retail is another day they're making money and adding to their annual bonus. And so they're going to delay as much as possible. But we're here to play the long game, and we're here to make sure that those changes happen.
That's good to hear. Okay, so we're kind of running out of time, but I did want to move on to our final topic of mostly DRS, but a GameStop one thrown in there. I know this is to me personally, this is a very exciting movement, so I do want to get your take on it. And the first one that we have is you claimed recently there would be an announcement coming soon about your feelings towards DRS, and I'm paraphrasing, that make those who doubted a support for DRS look silly. We want to know, is there an update on this information, and can we also get a more detailed statement about your actual feelings towards the DRS movement, specifically also surrounding GameStop, and even just DRS as a whole? in terms of what it does for retail?
Sure. So I think the DRS movement is fascinating, and I think it's I think it's really cool. And I think it's cool when decentralized movements accomplish things in the real world together. I think almost from a philosophical perspective, I've been really amazed to see it play out, and it's great. So don't get me, nothing I say is meant in any way on either side of it. I have been reticent to, for example, clarify whether I've DRS my shares or not, because I am worried that people will take action based on what I say.
Okay.
And I don't
legal action.
No, I mean, like, if that means, a bunch of other people DRS because they said Dave did it. I'm not here to give financial advice. I'm not here to give advice on this. I don't want to be in that position. I don't feel right about that.
Okay.
Now, that being said, I think that investors establishing direct and long-lasting relationships with the companies that they invest in is an amazing thing, right? I think that is one of the coolest things that have come out of this entire episode, is the idea that people want a relationship with their company. And I know a lot of people want it because they don't want their shares to be loanable, and that's fine too. But I think that something that's always impressed me with GameStop and Superstonk and the folks that are involved in the movement and the apes is that it's not trading, it's an investment, and it's a long-term relationship with the company. And I think that's what markets should be, right? Like, I think that is something that we should aspire to. So from that perspective, I'm very hopeful that this can spark more DRS movements, right? And more of this kind of relationship. And so, I don't have the announcement to make yet.
That's fine.
Lawyers are there's something being worked on, and it's going to be cool when we can. And
sweet.
I think that as I think about the terminal as well, and I think about some of the brokers that we're talking about partnering with, even from their perspective, they're talking about providing mechanisms for people to DRS their shares simply and easily, and then to exercise those voting rights collectively. And so that's part of, I think, what is one of the coolest things that could come from this in a forward-looking way is retail investors, individual investors, collectively working on increased levels of corporate governance and corporate responsibility, and making sure that the companies they invest in reflect their values. And so to me, the more we can do to help with that and facilitate that, the better.
Okay. Yeah, I think you're right. It really does help retail sort of become more involved with the company that they're in. Now, also to add to that, I mean, here we've learned obviously that it's a pretty big game changer, and we have had obviously some people in the community of Supersonk in general. They came together to create the DRS GME.org site. I don't know if you've heard of that or not, or you've seen it. I'm sure you might have. Of it. Yeah. So basically, it's to share knowledge and educate investors around the world on the topic of DRS, not even just for GameStop, but DRS in general. But we want to know kind of what we can do to help get this information perceived as a more reputable source, not just something that came from a Reddit by an ape or something, and sort of get this information out to the mainstream, similar to what you're doing with We the Investors, or something that maybe you would include in your We the Investors site, and focus, like you just kind of said, focus more on providing that information. Of people don't even know that they can direct register their shares, and they don't know that they actually own it in their broker. So I guess, what do you see? Do you see the site kind of being used?
So like I said, with We the Investors, at least, we want to continuously expand the platform of changes that we want to see in markets and the things that we want to educate people on. So, I could absolutely see it as a resource that we could leverage, and that we could, help to increase visibility towards. I think that, like I said, when we can make this announcement, maybe everything will seem obvious at that point. But that might be a good time to talk about how we can more deeply integrate the idea of direct registration and settlement and clearing, and other issues. I mean, there are other issues wrapped up in settlement and clearing, like whether shares are being held in a broker's name, or whether you can just hold them in your name with your broker, which is possible too. So I think there's a lot here. So I would just maybe say stay tuned on that, and
Cool.
let's revisit it.
Okay. One last DRS thing, then I got one GME thing. So I mean, this is kind of, I just want to know your opinion on this in terms of, there's about 76 million shares of GME, though 13 by insiders, 15 directly registered as of today, 14.5 in mutual funds, ETFs, and 13.8 in institutions. So that kind of only leaves about 19.6 million. I understand ETFs and institutions are actually not locked up, but still tradable. But do you theoretically, do you actually see a breaking point for what retail DRS is? If it's going 4 or 5 million a quarter, what do you see happening if it continues?
Who knows?
Is that something that you can answer? Yeah,
that's the craziness of this. Like, this has not happened before.
It's a real experiment that affects real world. Like you were saying earlier, the markets are a real thing that impacts on a global scale, and this is something that's never been done before. So, I mean, you can't really predict what's going to happen, but do you see this continuing, or?
I mean, I don't know. I think if it does, again, it is incredible and fascinating. I think that, the shares held in ETFs, mutual funds, and by institutions, those are real shares that will be loaned out. But I do think that what we see from the stats that we're getting from, share lending and such like that it's becoming harder to find shares to loan out. It's becoming more expensive. And I think that is the best indicator that the whole DRS thing is having the impact people want it to have. Now, you keep locking up float, you keep making it difficult to lend out shares. I don't know. I have no idea what's going to happen. No. I'm really interested to see.
Same. I mean, if supply and demand is a thing in the market, you're just reducing the float. A company reduces the float, price goes up. It's more demand. But I mean, we're obviously not really seeing real supply and demand right now. But we'll see where it goes. I'm excited for your announcement.
Again, if you combine that with getting rid of payment for order flow and moving trading on exchange and having every buy order impact the NBBO, which is not happening today, then again, I don't know what's going to happen, but I'd be fascinated to see it.
It's a crazy experiment. We'll see how it ends. Okay, last one before you go. I know you got to run, but I want to know, and I don't know if you're allowed to comment on individual stocks, but what do you honestly actually think of GameStop's turnaround prospects and value? Maybe not the value of the company or the stock, but kind of what do you see for the future of GameStop in general and kind of surrounding the NFT marketplace as well? Do you have just thoughts you want to share?
I think that it's obviously, like, it's a play on both the NFT marketplace, which is, I guess I'll have to see it when it comes out to, I don't know on that, but this idea that you have a group of people coming in with a lot of sort of e-commerce experience, and they see a lot of potential for, something like a hybrid of, bricks and mortar and e-commerce and online, I think is really compelling. And, I think, I mean, I bought into the turnaround idea and the fact that this company does have real value now. And I can't say it's trading on fundamentals. And, we haven't seen them really, turn a profit yet, but I think they're fortunate to have an investor base that's very patient on that. And so, I'm really curious to see if they can do it. And I think it's a fun ride to sort of be staked in it and be part of it and watch it.
Exactly. Tomorrow, and if not tomorrow, it'll be the tomorrow's tomorrow.
Right, exactly.
Okay, well, that's kind of all we have for the questions. Now, I did want to just kind of open up the floor to you if you want to talk about the terminal more, if you want to talk about just your thoughts and opinions on sort of this whole saga that's happened. And I am kind of interested to sort of hear a bit about your adventure. I mean, even since January, I guess, where you were in January, and how this sort of blew up in your life. I know you've been fighting for market reform for, I mean, longer than we even knew what a candlestick was. So it's a lot of history there, and it's probably pretty exciting to you to actually see this change actually begin to happen. Like you said before in the quote, that you think real change will come, but it was too early to tell, and now that real change kind of is here. So I guess I just want to know your honest thoughts about this whole thing personally.
Yeah, I mean, I think it's just such an adventure, and I'm really
Mhm.
like, I think it's been a fun thing to be a part of, and I think that's a big reason why it's happening is because a lot of people want to be together. They want a community, and they want to be making change, and they want to be improving the world. And
Mhm.
it seems that this is one way to do that. That's why I've been trying to change markets, because I think it has a real world impact, and it makes a difference in the world. And I've wanted to make sure that like what I spend my time doing is something that's making the world a better place, which
Mhm.
is sort of that clip that you played in the beginning of
Yeah, yeah.
I don't know if anyone knows what that's from, but that was a story I recorded on a website that I built in 2011,
Mhm.
and which came out in 2012. So long before any of this was a glimmer in anyone's eye. I left high frequency because I didn't feel like that was the best use of my time and energy and abilities. And so I feel good about what I'm doing because I feel like we've got an opportunity to make a difference, and that's an unbelievably exciting thing to me and to a lot of people in the industry who I've been supported by and who I talk to and who I've worked with in the past. So you know it's it's just fun. And I'm
Mhm.
trying to have fun. It's something where I'm not public speaking, and being a public persona doesn't come naturally to me.
Mhm.
So it does lead to anxious situations and negativity as well. But I try as much as I can to focus on the positive side of it and to just kind of be along for the ride. And I'm loving it, and I hope that what we build at the terminal can help with it too. But I also think that the movement, the We the Investors movement, is something that I believe could have real staying power, and can be a real force, not just now, but for many, many years, to make sure that there is a voice for individual investors in the debates that impact their investments and markets and their economic lives so significantly. And
Mhm.
I really believe in it, and I'm just going to keep at it. And so yeah, I mean, I appreciate you having me, and I just really appreciate everyone being interested in this stuff. It's still weird and funny to me, and to, again, like all the people that I talk to in the industry, like there's a small group of people who ever cared about these issues.
Mhm.
And we all know each other, and we all argue all the time, and agree and disagree on all sorts of stuff. But in 2014, Flash Boys came out, and for like a brief period of time the public cared, and then stopped caring.
Mhm.
And so this is the first time that it seems like there's actual staying power, where the public cares about these issues as we think they should, and wants to stay and be involved, and aren't leaving. And that's the
Mhm.
best part of this. So I'm in it for the long run too, obviously.
Yes, of course. And that's good to hear. And honestly, the appreciation does go both ways. And it's, to me, it's pretty amazing to kind of find this community. And that's sort of where I was encouraged through Superstonk, but from just seeing so many people just doing research and sharing all this data and education just for free on their own time. So that's kind of what happened here. Is I got a notification that said you get a free trial to the 1 second chart on TradingView, and I was like, oh, okay, well, I only see 1 minute, and like that's 60 times faster. And I still realize that like hedge funds are 1,000 times faster than that, if not more. But I wanted to share that just because it sort of encouraged me, and then it sort of turned into this whole thing. And the people that you meet in this, you really can tell that they want to do good, and they want real change, and they actually care about each other and their fellow man. And I see that in you, and I'm sure many other people do. So like you said, focus on the good, and keep fighting, because there's a lot of people in your corner, and we really appreciate it. And I want to thank you so much for just giving me the time. This is unreal to me. I've never done something like this before. I just share the stream. That's it. I don't go on cam. I got to work. I have a full-time job. So
Awesome.
honestly, thank you. Thank you so much for coming on and giving me your time.
Yeah.
Us and the whole chat definitely appreciates
Yeah,
it.
I enjoyed it. Thanks for having me.
No problem, Dave. You take care.
All right, you too. Thanks.
Have a
Bye.
good one.